The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour. From Alaska to Nebraska, from Japan to Milan, from Tanzania to South Korea. We love to come to you every trading day at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on? Well, it's certainly a downside market, down 2.7% on the S&P cash. Volume has been sporadic. We've had lots of times when you just would have nothing, and then a bunch of volume came in, both up and down. Kind of catch as catch can. I have to say that whichever side you're on, we'll get to the sit rep, and that is that the risk reward is probably about as good as it's going to get. If you're long, you want to be. If you're thinking long, you want to be buying here. If you're short, you're looking for confirmation that this fails. So it's going to be a pretty big day. Anyway, 3,046 is the last tick I show. Let's see. Let's take a look at that. 3,048. Now, I don't buy a lot of index positions for the broad indexes. I am more of someone who goes after individual ETFs or sectors or individual stocks. And I've been out here. I've looked at this as yet another gift, as we saw a couple of weeks ago. I'm either going to stop out for like 1% or maybe 2% when we've been getting 4, 5, or 6 times of that on the other side. So risk reward, incredibly good. You can make a case for either side of the market. Volume is non-determining because we've had huge moves both up and down on volume today. And the question is whether we're going to have that volume at the end of the day along with this. 3050 certainly kind of looks like where you're seeing people come in to the market on the S&P cash. And, of course, you couldn't have probably any more despondent, abject failure mode of the mainstream media out here. And you all know how I like to buy when there's blood in the streets. Well, that's part of what's going on today. One of the other things I did want to bring up here in the first segment was Hertz. Let's get that here. HTZ, right? HTZ, I think it is. And, of course, you see these huge moves in these companies, and this is why I tell everybody just to stay away from these things, because you never know where they're going to come. But last time I looked, well, since I have the capability, let's go ahead and look at HTZ. Darn autocorrect. Up 44. It was up 50%. Well, Apple a whole lot more. They're going to start selling their cars to anybody they can. They got about 150, 160,000 cars, and they're going to spread them out. They're going to spread them out across a great deal of the auto nations and all these big chains. And they think that will be enough to save them. I don't know if it will or not, but as we said before, I don't know who these people are that wait for the last dime in these companies to go bankrupt. If you shorted this thing at a much higher price, then why wouldn't you cover it $1 or 78 cents a month ago, or all the other stuff? Now, of course, because there are apparently people who have donated their brains, living brain donors, they didn't cover down there. And, of course, it went up, what, 600%? Yeah, 600 cents. And okay. And what else do we have? Oh, anyway, you never know when this stuff's going to come out. And, of course, what can this do? This means that maybe they can hang around for another year or two. It's kind of like a 6-year-old's loose tooth. Say that a bunch of times. Loose tooth. Hanging out there, and it just, eventually you just got to yank it. But of course, if you're a CEO or an executive at Hertz, where are you going to find a job making this kind of cash? If you milk this thing for the next year and a half, you can have a nice cushy job while you're figuring out how to get that golden parachute ready to go and get and move right in to yet another big company that maybe you can plummet. Plummet? That's not the right word. I want to think, it's like the Vikings. What did they do? Pillage. That's what it is. Pillage. But that's it. So anyway, just watch out for these things. There's no reason to be in these things unless you know something that everybody else doesn't, in which case you're probably going to get caught and go to jail. So just watch it. But interesting, they will probably be around for a while now. And that's why Sears and Radio Shack and all these other companies were able to hang out for years. They'll always find something they can sell, mortgage, or buy. And again, whether or not you've got bonds to sell or whatever things they can, flaky ideas that everybody came up with, it's just silly season, and it's more gambling than prudent speculation, which I try to stay out of. Okay, let's take a look at some of the other big movers of the day. And that is Amazon. It has a little bit of a dark cloud cover up here, not a lot of volume so far on the day, although the day is not over. Yesterday, you had 4.2 million shares. You got 3.2 million shares already, kind of signaling that you're probably going to at least get to that level. You wanted about 5 million shares to match the June 10th spike that reversed. So do you go kind of sideways out here? Well, it's about middle of the summer. My thought is that this is going to be kind of the tough week as we get into it. Of course, Friday is the 26th. When we come back, 29th, all through next week into the 4th of July. Of course, we're out on the 3rd. So you really get 4 days of fun buying before it's really kind of over next week. So we get a couple of days. They're kind of sideways here. You're going to start getting at least some money coming in. Although I see a lot of articles saying you might as well just slit your wrist next week. Generally, I try to go the opposite way of whatever the financial press is telling me. But guess what? You don't have to believe me. Short or long, I am speculating that you probably have the best risk reward on either side of us over the next couple of days. Next week, I would be looking for a much stronger market into fund buying into the 4th of July. But that's my take. We'll be back in a minute. And we look forward to your calls at 877-927-6648. Your emails at path@tfnn.com. And your messages in the den.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Are we back there? Yeah, my cable, it seems to be problematic at times, but I don't know what I did to it today. But, back with the soldering iron. I'll fix it again this weekend. Okay, let's take a look at what we have rolling in. Okay. First question today was about a couple of, actually 3 positions we had made a lot of money on in the Tech Insider. Sold them yesterday, and basically I'm going to paraphrase it, so I don't want to say the person's name or anything. But they were talking about maybe they didn't put enough money in each position. And my response to that is you need to learn to what you can sleep well with at night. The problem with not taking responsibility or having too much money in a position, even though you made a lot, and it's certainly easy in the rearview mirror to spend a lot of time saying, I just should have put more money into those positions. That's not a problem. But since you can't predict exactly which ones are going to be the winners and which ones are the losers, you generally wanted to say, okay, I'm going to put 10% of my money in one particular trade. That way, the worst thing that could happen, it goes to zero. You still have 90% of your money. Because the day will come. It's been a long time. I think, the last really horrible day I had, I think it was 8 years ago when one of my tech stocks ended up being 50% lower. But that's like 8 years now. If you trade long enough, you're going to get something that blows up underneath you. It's just a matter of time. So you don't want to let winners go to your head the same way you don't want to go losers to you pulling your punches. And a really good trader who's done it for a number of years will do the same thing he did on the 4 previous times when he didn't have a winner. You work your system, and you know it's going to work out eventually. If you can just be 50% right and know that maybe at best you're doing 50% right, and you keep your losses to, let's say, 3 or 4 or 5%, and you can get 15 or 20%, or in the case of these last few trades here, more than 30%, you can be wrong an awful lot. And it's not about being right and wrong, as many people in the den, including John from Philadelphia, brings up a lot. It's about making money. So one of the things I learned racing motorcycles and going to motorcycle school was to identify all those things. I remember, I don't know if it's Tom O'Brien, maybe it was somebody else, talking about being in a trade and feeling like someone was sitting on your chest. I don't get those anymore, but I can remember when I was first trading and probably trading too deep in a position to have one go against you and just feel that overwhelming pressure. Well, I felt the same thing when I was racing motorcycles. There was a lot of reasons why you were getting those. And the problem is whether or not you're at midnight and you can't sleep. Then the next day, that compounds itself because you don't make good decisions. You're better off always having smaller positions and working up to a level and then noticing when you actually start feeling those feelings. In motorcycle racing, when you get tunnel vision, when you start and quit breathing, which has happened to me, you think, well, the easiest thing to do is just breathe. Well, you're doing 160 miles an hour. You're getting ready to put your knee on the ground to go into a corner. It's not as easy as you would think. You get stiff on the bars. That's the worst thing you can do because then you start transmitting all the bumps back into the rest of the chassis of the bike. Anyway, one of the best books, I think I got it laying up in my bedroom. I'll see if I can't snag it. But even if you don't race motorcycles, this guy was absolutely brilliant at tearing apart every little thing about racing motorcycles and understanding and describing it and bringing it out. But it was a big difference to me to go to those schools and figure out and identify what I was doing. And I thought about it for a while, and it was the same thing when I was learning to fly planes. They talk a lot about it. Or they did it. But one of the things I always actually wanted to thank my instructor for when I was actually getting my ticket was that he would take me and had a chair next to the plane and would spin me around till I threw up, then put me in the plane, and then said, now you got to fly this plane. Now, I won't let you die, but you got to fly this plane. You got to take it off right now. You got to go around once. You got to land. And if you can land it in the worst, absolutely, you've just thrown up, your head's spinning, if you can land it that way, you never have to worry about it again. You've already proven to yourself, unless you're dead, you probably can put this plane on it. And the level of confidence that I got from that is, I think, one of the biggest things I've ever done. And that is, if you know what you're doing, it'll come to you, especially from the training. And that training comes from doing it time after time after time. There's not an easy way around that. You've got to have the acquired knowledge. It's not something you can read in a book. It is just something that you want to say, okay, I know it's going to take some time to be a good trader. I'm going to need some time to figure out what I can sleep with at night, because if I actually get too much in a position, I'm probably going to do the wrong thing tomorrow. One error actually leads to another. In fact, I was reading the preliminary accident report for the crash in Pakistan. What was it, 4-6 weeks ago? I don't know how long it was ago. And you just go through and see how two pilots took a perfectly good airplane full of passengers and killed everybody. I think one guy lived for about 5 days and then died. But they literally went and killed everybody because one mistake led to another mistake, led to another mistake. That's generally when traders blow up. They either do something wrong and it leads to the next trade being wrong and the next trade. In the airline pilots, they call breaking the chain. You've got to break all those different chains that have to happen. It's not just one thing. It is a multitude of things that come in over and over again. And you know what? You don't have to do it. The airline pilots could have they were, when they were supposed to be slow and at 6,000 feet, they were fast and at 10,000 feet. They all thought that they could get it back in. Everything that their airlines tell them to do is just go around. We won't dock you. We won't fine you. Just go around once. Every airline pretty much has the same procedures. They didn't. They forced the issue. And that's where you have to break those chains. Just know it. And then trading stocks, if you're feeling uncomfortable, just get out. There's always another trade. I hear somebody else say that.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And, I was going to say I got this book, and we'll get to all the other questions. But you can give me a call at 877-927-6648. I bought this book, had to be in 1999 or 2000. And it's called The Twist of the Wrist 2. There's I can't even say it, A Twist of the Wrist 1. But I thought this was, when I read this stuff before I went to their school, it was absolutely amazing because I started seeing the problems I had. Maybe you should make a list of the exact same problems you have before you start going off the rails. But if you're racing motorcycles, you'll roll off the gas, you'll tighten your hands on the bar, you'll narrow and frantically hunt for a field of view. That's normally because you've got tunnel vision. You'll fix your attention on something that you probably shouldn't. You generally on motorcycles go where you look, and that is deadly. I saw a guy literally run directly off the end of the road because he was looking at these things that looked like something out of Friday the 13th. They were insulators, but they looked like they would just carve you up into little 6-inch slices. I saw the guy in my rearview mirror staring at them, and he couldn't go around the corner, and he ran right. Thank God he didn't go to those. He actually hit a big junction box, though, and bounced off of it and lived. Steering in the direction of fixed intention, frozen or ineffective steering, braking errors, both over braking and under braking. But that tight on the bars was always the one I had problems with. And once if I knew I was in there, you just back up to the point where you've got like 3 fingers on each bar. Amazingly enough, you can drive your motorcycle around, at least modern motorcycles around, if they're tuned correctly. And I think that's kind of a parable for a kind of a light hand on the positions you have. And don't push too hard. Maybe that's kind of it. Anyway, excellent book if you're riding motorcycles. If you just find it in one of the bookshops, just go through the list of all the survival reactions, and maybe you can put them down on what you do when you start getting and feeling a little antsy in the market. But interesting nonetheless. Okay, Cardiff Oncology is the question, and golf clubs. I hear kind of the exact same thing when people start. I'm not a golfer, but what do they call it? You got one where you're far right and far left. Can't remember. I lasted all of about 30 minutes on a golf course. I couldn't. I don't have that kind of patience. Video gamer. Slice and hook. I know. Yeah. Okay. Anyway, Cardiff Oncology, CRDF. Nice profit from the person that's got it. You're in the right sector. Question is, do you want to try to buy it back and maybe miss? You didn't have all the volume you wanted today, but it's not rolling over, still looking good. You're in the right sector. Generally, if you're in the right sector, and this may be the only right sector in all of the market, gold maybe, metals, who knows, we'll see on that. But this may be the only sector that you want to be in right now if you're talking about a longer-term investment. I'd sit on my hands. I liked the move. The energy wasn't that bad on the way up. You're probably going to have some consolidation, but you have a position that you probably are going to find it very hard to ever get back in. If you can break 392, you've got some real running room to go. You got, you could see on a chart here, this thing, the next real move up is $34. I would just, this thing's come out of how many years? 2, 3? This come out of a 2-year consolidation. You may not make money on it, but the way I would look at it is I'd sit on my hands, because let's say that there's a 40% chance you're right, the upside is fairly tremendous in this stock. So I would say, even if I knew that the thing was probably going to come back and do a 50% retracement, I'd still want to sit on my hands. You're in the right sector. You're in a stock that's had this incredibly long consolidation. If it breaks for you, you really maybe $7, $9. If they've got something and it's real, I don't know about this company. I haven't followed them. If they got something that's real and you can get through $10, you got $34. And that is where I would say everything looks good on this. Even if you lose money, it's probably well worth taking the risk because the reward is so high on this stock at the moment. Okay, they have something real, then go for it. I can't see doing anything else. Again, I don't know much about it. Mr. Overall Market Outlook, can you say quick synopsis? Okay. Let me close this so I can get around out here. Come on. I need to get back to and then update this. There we go. Okay, we're off 76 points on the S&P cash. My synopsis, my sit rep is you either want to go long or you want to go short. It's one or the other. If you can find some really horrible stocks, not a bad day to short. You know by the end of the day, if it doesn't close lower, then you've bounced off of support. If it goes lower, then you've broken support. I right now don't think that there's a better chance. I'm betting on higher. I wouldn't say betting. I'm speculating on higher. And maybe you've got a stock or somebody else that's much weaker, and maybe you want to speculate. You could probably be both. But again, I bought 4 positions earlier this morning to add. They are all with maybe a percent stop, maybe 2%. So my risk, literally, if these things don't close higher today, is probably fairly low. Maybe it goes to 3% or something, but and again, if you think the wheel's going to fall off the wagon before the end of the day, you probably have maybe 2 or 3% higher on these stocks, and you know that the move to blow out the lows failed today. So, I think that's fine. Either way, I think probably even if we go up a little bit, we're probably talking about a couple of days that are sideways. Then we get into fund buying next week. And my guess is they're going to mark these stocks up. If you do think that the wheels are going to fall off the wagon, I think your bet is much better. Let me quit saying bet, saying speculating. And that is when you come back on the 6th or 7th of July, that would be a better setup. Now, maybe the wheels fall off the wagon before then, but I don't see it so far today. But again, today's close is going to tell you a great deal. Close over 30.50 is on the bullish side. Close below 30.50 is on the bearish side. And you know what? I like to buy when there's blood in the streets, and that's what I see today. I've got a very, very narrow stop on most of my stocks. So I'm kind of liking my chances here. But guess what? They don't all go your way. So take your stops. But like I said, it's going to be a pretty good indication of what we get on the close today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And a question about SPICE, SPCE, more a fundamental call than anything else. It's just bouncing around. Of course, you had a big bounce on them getting chosen as the what would you call it? The excursion into space, and they're going to be able to take individuals up next to the space station. I don't know if they're going to go in or what. I never read the details. I always thought that this was the toughest part of going to space, and that is trying to make a case that there are enough people that want to go into outer space to make a living. I like SpaceX's idea of we're going to be the Henry Ford of space and get the cost down to the lowest common denominator. We're going to turn all our satellites up and become internet and go after the green dollars. It's not public, but again, everything I see just seems to me like a better business model than trying to get billionaires to go into space. There's just not that many of them. So you get a handful of them. Maybe you get a lot of them. There's always use for a communication satellite in orbit. There's not so much use for everybody going up there for 30 minutes, waving to the Russian on the space system and saying, "Пожалуйста, спасибо." Those are the words I know in Russian. And going back home, which would be fun. And if I had a couple $1 billion, I'd probably do it. I just don't know how many people are going to spend 3 months learning to be an astronaut just so that they can go up there and sit. They're not going to be flying the thing. So you need like 3 months of training just to go up. It's an awful big get for somebody that's a billionaire that's used to telling everybody else what to do. Just, again, the part that Virgin Galactic does that I think is better is the quick turnaround on launching 400-pound satellites into space at any time on the 747s. This big bounce was just the opposite of that. It was betting on space tourism, which, again, like I said, a tough get. It's not like you just go up for the day and that's over. You're probably talking about 3 months of your life getting prepared to go up in space if you're going to go into the space station. And that's, of course, what the Virgin Galactic bounce was about. They've been chosen to actually train the astronauts to just ride up to the space station as space tourism. So I'm not a big fan of it. If you wanted to get into it, what you're looking for is a low around $14 and change and on like 5 million shares, and you may be getting there sooner rather than later. Okay. Okay. Anything changing in the big guys, NFLX? We'll take a look. You got kind of a nice reversal pattern here on Netflix. You don't have really kind of huge volume yet. And again, it may take a while. It may take into September before the huge hangover from watching so many videos you want to scream. All I can say is that the line out to the beach here, even during the days, is an hour. There's if you're not unemployed, guess what? You can go out and spend the entire day on the beach for $5 for everybody, including your kids. And you can social distance. There is enough room out there. But I think people are starting to get very overhung with that. The numbers from Nielsen kind of back that up, and that is we're down about 30% on viewership in the last 2 weeks on hours in the United States. So kind of an interesting pattern out here. I would love it if it had a lot more volume. You got 3.6 million shares right now. You went up on 6.2. So, like I said, maybe you get 5 billion shares. You're still going to be down on lighter volume. You may need to do a little bit longer, and like I said, it may even take into September. The scenario where this thing tops out around the first weeks of September make a little bit more sense to me, because guess what? That's probably when they start running out of new series, because everything stopped the end of February. Remember, they've got what are we at? We're in almost a 7th month. So we're already at 5 months down the line of no production in Hollywood. That's going to put a big dent and window in it where they're not going to have some new stuff. I know they bought some of these movies that would have gone to the theaters, and that can plug the hole for a little while. But the big series that they have, Netflix, that's going to be a bigger problem. That's why I think maybe they get into the end of the summer, and then we start seeing the real problems develop. Right now, I'm not a big fan of pulling the trigger just yet on Netflix. Okay, you have any other questions here? Do I see anything changing in Apple? Probably talked to Tom O'Brien about Apple on Friday. Basically, everything I thought the day that they had their dog and pony on Monday holds today. They have one thing that interests me. They stole everything that they could from Android that they told everybody that they didn't need or wasn't any good, and put it into their own software. I continue to think that the downside on Apple is going to be when they're charged, especially on antitrust for their App Store. We talked briefly about it, but I don't think, from what I've read on scholars in this particular part of law, which is antitrust, that they're ever going to be able to justify the 30% that they take. And that's part of it. Just the huge number when MasterCard and Visa take 3% for basically doing the exact same thing. They're not doing much of anything other than that. The other thing would be that they are not letting anybody else try to take money in from any other source. I just don't see how that passes the Supreme Court muster for antitrust, because that's basically what all that stuff was ever written for, and that is people making monopolies or virtual monopolies for playing in their sandbox. And of course, too, the biggest problem they have, 97% of all the people that do something with Apple do it with less than 10 apps. And there's another 2.5 million or so active. You're basically fighting for crumbs if you're a programmer in the Apple App Store for the iPhone. So, like I said, not much has changed. Do like that thing where you can hold your phone up to the door and it unlocks it and starts your car and all that stuff. But you're going to be able to get that on Android too. That is going to be a standard. Okay, what else do we have out here? Question about the SMHs. Oh, we're going to break already. We got just a little bit of time. Very tiny. Be very quick. 877-927-6648. Or email.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back out here, kind of hovering around 30, 48, 30, 50 is kind of the magic number of being on one side of this trade or another. And, of course, not giving us a lot of clues just yet, but we've got 1 hour to go. So you're probably not going to be that far away by the close. But I wouldn't be farther away than a mouse click from either getting in or getting out. But like I said, I'm not in the indexes. I'm in individual stocks. The old saying on Wall Street is it's not a stock market, but a market of stocks. And you may have stuff that's either much weaker or much stronger than the general market. Question about TNK, which is TK tankers, which looks good out here. Man, you'd love it to hit $11.94 and test this February 27th low, but you're about half the volume of that candle already. Maybe it gets down there and tests it, doesn't, but shippers look good. I would have liked to seen this one have less energy off the April 28th high. It's about the same on the way up and the way down, which kind of connotes that you could be in a trading range more than you are in a big move. But you know what? If you just have a bounce, the bounce could be up to $23. So, like I said, there's some magical risk reward at this point, both being long and short. This one, of course, You just don't want it to close below 1194 with more than about 2 million shares. So you're pretty close. Now, this one may be ripe tomorrow. Okay, got about 10 seconds left. Okay, we're sitting out of here at 3,048, down 718 points on the Dow. That has become the thinnest of markets that I can remember. It's kind of like when the futures went thin a couple of years ago. The Dow has become thin during the trading day. You can probably move it around a bit these days. NASDAQ off 224. Sell when you can, not when you have to. Or so buy when you can, not when you have to. Just the other side of that. We'll see you here tomorrow. Same bat channel, same bat time.